Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Good Saturday morning to you. Welcome to another edition. It's Florida Talk Real Estate. We call it 2 hours of infotainment. Because that's what we try to offer you every Saturday. A bunch of information in the world of real estate, what's happening now as things evolve, keep you educated and understanding what you're going through. And of course, try to sprinkle in some entertainment for the next couple hours as well. Thank you for joining us, whether you're on the old terrestrial radio, that's 92.1 or 101.7. Maybe you're choosing to live stream with us this morning. You can do that. Florida Talk Real Estate on Facebook. We go live stream. Good morning to you out the gates. Maybe you're on YouTube as well. Florida Talk Real Estate LLC on YouTube. Not only a hub of a ton of informational videos, but we live stream on Saturdays, 9 until 11. Thanks for tuning in right out the gates. And always, you are welcome to join us with your questions, comments, concerns in the world of real estate. You want to jump into the conversation? Dial it up, 877-927-6969. Jimothy, our producer extraordinaire, he'll line you up there. You make the call, we'll take the call. We is me, Johnny C., your air traffic control, of course, the rest of the starting lineup. By the way, you can access the entire team always at floridatalkrealestate.com. I'll continue to remind you through the remainder of these next couple hours. Let's say good morning to the mortgage guy from the mortgage firm. There's our friend Mike Rauch. How are you, Michael?
I am doing great this morning, Johnny. It's a beautiful, lovely South Florida morning. Starting to cool off. Just loving the yesterday morning, this morning. It's a great time to be sitting in your kitchen doing a radio show.
Yeah, I hate to say it after the aftermath of what wasn't great weather for a few days for many in the state of Florida.
I know.
We have had a beautiful last couple of days.
Yeah.
Oh,
yeah. It's like you have to move on. I mean, it's easy on this side, of course, and I don't know if we're going to be talking about that stuff, but yeah, pretty rough over on the other side.
Yes. Oh, lots of recovery and plenty of need, and I'm sure we'll have some opportunity for you to donate. We'll give you some information, but there's lots going on for sure. If you're not understanding what we're talking about Ian that came through and caused a little chaos through the state of Florida. Let's say good morning to, speaking of someone very involved with the storms, Brightway Insurance, Juno Beach. Always paying attention to your insurance needs, and that's our buddy Ross Komarinetz joining us. How are you there, Ross?
Doing well. Good morning, everyone. Good morning. As Mike said, yeah, it's a great morning to be inside. We should be doing a remote somewhere outside like we used to.
We want to start lining those up here pretty soon. Maybe, just maybe, your wish will come true, Ross. Maybe, just maybe. Let's round it out on a Saturday morning with our fearless leader. I've told you for over a decade he runs a top-producing Keller Williams team. At Keller Williams Innovations, you'll find the Florida Home Pros team, and that's where you'll find Jimmy D. Jim DePola, good morning to you, my friend.
Hey, good morning, Johnny C. Good morning, Mike. Good morning, Ross. Boy, we were really, truly very lucky, Palm Beach County, with the exception of a couple of spots here and there. Of course, the Delray Beach, Kings Point area, which I know very well. I flipped a lot of properties over there back in the day. I used to be a specialist in buying Kings Point properties, fixing them up and selling them. So I know that community really well. So not surprised that the buildings didn't handle the winds that well. Those buildings are 1960s over there. And during Hurricane Wilma, when Wilma came in, there was actually more damage than the one this time. In 2005, it was more serious for Kings Point, but I still read in the paper that 1,000 people are displaced over there, which is just really crazy.
Sure, they get a little bit of rain in their flood in Kings Point, so I mean, you get a squall that we definitely had plenty of in Palm Beach County, and you can have some problems.
Yeah, amazingly, where I live up on north end of Singer Island, I hardly had anything. In fact, the puddles that are always at the end of my driveway of the condo were drier the last 4 days than ever, because there's always a puddle there whether it rains or not rains. There's just a puddle from from whatever you want to call it. I don't want to get political, but water. Okay, and it was the driest it's been. I couldn't believe it. There was a little bit of rains, but not much. So I can't believe how lucky we were. And I feel so bad for the people over there. You know, I covered Andrew a little bit, Hurricane Andrew in 1992. And Homestead was just totally devastated. But I got to tell you, I actually, from what I'm seeing on the news reports, Fort Myers, way worse than Homestead in 1992. And Andrew, I think, remains in the top 4 strongest hurricanes ever hit Florida. But I don't know if this one's going to displace it as number 4 or not. I'm not sure. I don't think so, because I think Andrew came in at 165 miles an hour. But I don't know what this one came in at. I know right before it hit landfall, it was at 155. But it hadn't hit land yet, so that doesn't count. It counts when half the eye is over the land. So I don't know what they actually recorded. I think it was in the 140s by the time that happened. So I'm really, I really felt a lot of empathy for the people out there, and I hope that they can recover. Ross, we're going to talk a little bit about flood versus hurricane insurance, if you don't mind, a little bit about that, because we went through that with Irma. Remember back in the Keys, we went through that. And there was this thing called insurance churning back then. Now, this is 5 years ago, but I had never heard of that term before, but it was called insurance churning. And a lot of people down in the Keys were really left helpless for a very long time. So we're going to talk a little bit about that. And I just have questions about like people's damage to the roof here, like things like that. And like, what will happen at that point. And also, we're also going to talk about just insurance in general. I read an article in the Sentinel a couple of days ago, the Sun Sentinel, where they were wondering, does Citizens Insurance in Florida have enough money to cover all the damage for all the people that will have Citizens? And the article laid out what would happen if we ran out of money. And Ross and I were talking a little bit about that off air, and I thought you had really good insights, Ross. So I'd like to get into that also a little bit later.
Cool.
Of course, we're going to talk about interest rates. Remember last week I said we were so 2008. Well, we've already last week's interest rate increase. We're not 2008 anymore because we're higher than any interest rate in 2008. Now we're back to 2007. So interest rates are now July 2007, 15 years ago. So that's kind of interesting. We're going to talk a little bit about that. These economists are still saying that prices are not going to drop. And I'm laughing my butt off because the prices are dropping. The figures are already showing the prices are dropping. That's a good thing in a way. I think it's kind of healthy. I don't think that the prices are going to drop so low that we're not going to see a lot of that appreciation that we got over the last couple of years is going to go away. I don't think that's all going to get wiped out. I just think the last year is going to get wiped out. That's what I think is happening. 2021, that was like total froth, right? It was just total froth in my opinion.
You don't include 2020 in there, Jim?
No, I think even though the 2020 was super, super high appreciation, that's when the boom happened. I still think we're going to get to keep some of that. I do, because I feel like with all the influx that we had from the North, who naturally thought our prices were too low, and that's why they were paying above asking price with no inspections and, cash and all that. I think some of that was real, that people felt that Florida was undervalued compared to where they were coming from. And I think some of that appreciation was real, in my opinion. So I don't think we're going to lose it all, but I think we're going to lose a big chunk of it. I think we're already well on our way to that, but we'll see over the next couple months. 1 month does not make a trend, but we already have 2 months right now, 2 months on the MLS, local MLS stuff. This is all down here in South Florida, where we've had 2 months in a row that almost every county that we cover, which is 6 counties, has seen the median sales price for single family homes drop 2 months in a row, right? So we're not at a trend yet. That could go up next month. We could have some unusual high-end sales that change the weighted averages, but I think the trending is showing that we're flattening out for sure, but I don't think the flattening out is going to stop at 0. I think we're going to go down a little bit too. So if you're watching on YouTube or Facebook, we might be like, we're here and the economists say we're going to get here. I think we're going to go this way a little bit. I don't know how much, but we're going to go that way. So all you radio people,
just went he down, by the way, for those that aren't on Facebook.
So that'll be it'll be really interesting. Wanted to do.
Are you going to hold on? Are you going to put something down that Johnny can write in the book? Percentage of depreciation year over year. You're going to make a prediction there.
You know what I'm doing? We're working very furiously behind the scenes to try to reformat the whole Facebook, YouTube thing, and get back in studio, which I'm so excited. If we can make this happen, it's going to be awesome. We're going to get back in studio where everybody can see everybody again, and we're going to be live on Facebook and YouTube with a completely different camera setup, so we don't look like the Brady Bunch in a bunch of cubes all the time. So I'm kind of looking forward to all that. But the reason why I brought that up was, why did I bring that up, Mike?
You're going to have a board. Jim's prediction.
Oh, I'm going back to some. I'm gonna talk to my buddy Cam, and I'm gonna have him go back and look at some of the shows from November, December last year, and find the times I predicted what was going to happen to interest rates and what was going to happen to prices. And I'm going to go back and pull those clips, and I'm going to turn it into a little thing and find out if I was right or wrong or how far off I was. I thought that would be a little fun. So if I'm wrong, make fun of me. I don't care. I don't have an ego. And if I'm right, I don't care either. I don't have an ego.
These days, with all the AI stuff, I mean, I could probably go back in time and make a video of you saying anything I want, right? Like
that's true with this new stuff, that deep fake stuff. I just heard that. Just read that Bruce Willis just signed his rights for deep fakes, so they could use his likenesses for deep fake, and he gave them permission to do whatever they want, I guess. Well, I don't know about anything, but they gave him permission to use the deep fake stuff. So
yippee-ki-yay.
Yeah, that seems like dangerous waters. But I'm going to go back and make a video that says Jim DePola makes a prediction. Freddie report will be this 6 point. What are you going to say? It 6.7.
Yeah, it was 6.7. We're going to talk about that in a little bit. I had a really interesting day, a very interesting day. Some guy named Mike who just came on the show. Good morning, Mom. Good morning, Mike, and thanks for stopping by. And please like the YouTube page, and please let other people know about us. But he says loss of inventory, demand going up for homes in Florida when you buy Southeast. So this guy's thinking that Southeast is going to be very strong from all the displaced people from the Southwest part of Florida. They're all going to be moving Southeast, and that will make our market like almost like a little bubble. I think he's talking about, but we'll see. That might actually happen a little bit. I'm not going to disagree with that. His name is Mike. So
I don't think he's meaning like loss of inventory, like homes lost. He's probably saying like loss of interest in that inventory, right? Like maybe it becomes a place, a less desirable destination. I mean, anybody who would really think about it, I mean, what happened on the West Coast could easily happen.
Well, if he's not talking about loss of inventory,
this year or even next year.
If he's not talking about loss of inventory for the losses that we just had, then he's not right about that part, because our inventory has been increasing. Although it's been flat, you can make the argument that July to August was flat. There was a very big increase from May through July, but July to August it started flat. So we don't know if we're going to get more or less. We'll have to keep an eye on that. But thank you, Mike, for your input. I really appreciate that. Anytime you guys want to reach out and make a comment or give us a call, we have it right down on the screen at the bottom. Give us a call live. Love to talk to you. John, good morning. John is one of our favorite fans from Facebook. We got him over to Ross, I think, a couple of weeks ago because he had his insurance dropped. I think he had that company. What is it, Ross? UPC? Is that the name of the company?
I don't remember who he had.
Yeah, I don't mean John himself, but is that a company, UPC?
Yeah.
I think that's what John had. He was looking for insurance. And I had a very interesting, I think it was Thursday. It's such a blur. Let's see. We had the show last week, so it had to be Thursday, not Friday. But I drove 305 miles on Thursday, and I started in North Palm Beach County, and then I had to go up to Port St. Lucie. Then I had to go out to Okeechobee. That was an experience, which I'll talk to you about in a second. And then I had to go from Okeechobee all the way down to Margate, Coconut Creek, all for my customers that day. It was a crazy day, and it was raining the whole day everywhere because, you know, the storm was coming. And it was really, really interesting just driving that whole gigantic area. It was very fun to do that and just watch all the different types of lifestyles and the way people live and everything. When you're out in Okeechobee, you could actually feel like in large parts of Okeechobee that you're more like in a southern town, like maybe Georgia or South Carolina, North
You're actually
Carolina, like
south of
those
that, though,
older,
believe it or not.
well, those older towns, you know, the older, slower towns that are really based on agriculture. You really see that. You don't think when you're driving around out there that the beaches are only, you know, who knows how far they are away, that the beaches aren't that far away. So anyway, it was really nice going out there and everything. But I got to tell you, can I tell you how I think they only sell in Okeechobee? I think they sell like a couple hundred houses a month tops, right? We sell, even on our bad months, we're selling 1,200 houses a month or whatever in Palm Beach County, single family homes only. But out in Okeechobee, a couple hundred a month is what they're getting. I think it's even slower than Martin County. I might be wrong. But at Okeechobee, this is what happened. I called up 3 places to go show my my brand new first-time home buyers, which is working with Mike Rauch, and going to be working with Ross in a little bit because they went under contract yesterday. I forgot to tell you, Mike. But Megan and Dylan wanted to buy a house, and they're first-time home buyers. They're on a super, super tight budget. And they were referred to us from Chris and Amy, and thank you so much. They've been longtime fans of the show and customers. I think we've helped Amy and Chris with 2 properties now. And then we almost helped her mom, but it didn't work out. But she's probably going to come back to us at some point. And Chris and Amy were so happy that they gave us, Chris is a big-time regional manager for Publix, and he gave us Dylan and Megan as first-time home buyers. So we started looking at Port St. Lucie, Fort Pierce. But even that budget was a little tight for them. So they decided, they already live in Okeechobee. So they said, Jim, do you do Okeechobee too? And I go, I'll do Okeechobee for you guys for sure. I love this couple. They're first-time home buyers, really nice people, really easy to get along with. Just really, really great on so many levels. So we went out to Okeechobee. We looked at 3 properties. Now listen to this. 2 of the properties, they didn't have a combo lockbox on there, which to me is okay because I don't agree with the ABC 1, 2, 3 lock boxes because I think they're not very safe. But they also didn't have Supra. Supra is the electronic lock box where you have to be a licensed realtor to get in the box or you can't get in the box, right? That's a very good high security. Well, this is how you have to do it in Okeechobee. 2 of the brokerages make you drive to the brokerage, pick up the key, go show the house, and then drop the key back at the brokerage. And when I called them up, I was like, what? I thought they were actually joking with me. And, you know, I grew up in Oregon, so I could make fun of country people.
Wait a second.
And I wear Western boots every day. But these people had accents that I felt like I was in Green Acres. I felt like I was that couple from New York that moved into this town that everybody does things in an illogical way, but it works for them. And then the people from the outside is like, how the heck are you doing it this way for? And getting very frustrated. That was me.
Was there something heavy attached to the key, Jim?
Well,
Like
this
a-
is how
like a
it's
block or
funny.
something?
Big rib,
Well-
right?
Right.
Well, here, do you got to pick up? Because you're going to need it for the key. Got to throw that wheel in the back of the pickup. So the first people I called, I didn't trust that they were leaving the key because this is what they told me. Now, this is a pretty decent sized private brokerage, like a brokerage that's big in the area, but it's just a local brokerage. They go, yeah, what we'll do is we're going to leave the key under the mat. And I go, under the mat where? And they go, under the mat at the office. I go,
Oh.
so you want me to drive to the office, find the key under the mat, and then what do I do with the key back? She goes, well, by the time you come back, our office should be open and you could give us the key then. But if not, just leave it under the mat again. So because of the rain, I got up there about a half hour late. So this office was already opened. But I was just too curious. So I didn't walk into the office right away. They have a big mat in front of the office, a big, gigantic mat, right? Floor mat. I open it. I pull the Mac back.
There's like 10 keys under there.
No, there was only one. There was only one key, but it was just a key with nothing. It was just a silver key. And then to the right of it was some envelope addressed to somebody else. And I picked up the key and I was going to leave and go to the house. And I was like, wait a second. I'm going to walk in and make sure this is the key. So as soon as I walked in, the lady goes, Are you the realtor from West Palm? And I go, yeah. And she goes, the keys are right here. And they were laying on a shelf. And I go, no, this is the key. This is the key. They told me it was under the mat. Here's the key under the mat. Nope, that's not the key. This is the key here. So I grabbed the key and she goes, if we're not open again because the cane's coming, just put the key under the mat. And I'm like, okay. I grabbed the key. It has the address on the keychain. So if they left that key under the mat, anybody that knows, they could go to that brokerage, open up the mat, see what keys are there. Their address is on the key. Go to the house. You got a free party time.
Maybe we want to edit this out.
I was just going to say.
I didn't say brokerages. I didn't say anything. Nobody's going to know. You have to go all the brokerage out there and start lifting the mats everywhere. But I just thought that that's kind of crazy. And I was thinking, do the sellers know that this is how the key situation is? And when I asked the third brokerage about Supra, they're like, oh, we don't use Supra out here. I don't know. It might be because of Wi-Fi situation or something. I don't know, because sometimes the Supra doesn't work. But anyway, I just thought that was
their system works, Jim. There's probably crime low. Maybe the sellers are just like, we just leave the doors unlocked. Just come by, right?
Anyway, I just thought that was a weird experience. So I got my ounce of pain from this because I'm making fun of them. So they got me back, and this is how I'm talking about the universe, not the brokerage. Okay. It was rainy, it was wet, it was sloppy. We looked at all these houses. I have to get down to Margate. I'm already in North Okeechobee at this point. And I'm driving back and I'm talking to Nancy on the phone, trying to get them some stuff to do, work out, my office manager, Nancy. And then I realize the run from Okeechobee on 710 to get to basically Martin County is about 47 miles. I had already gone 30 miles of the stretch, and I still had the keys in my pocket for that brokerage. And I'm oh, man.
Wait, you were going to Martin or you were going to South?
I had to go to Martin. For some reason, it didn't take me on the south side of the lake. Instead of hugging the lake and getting off at Southern, they just had me go 710 again, which I didn't mind. I love that. There's a canopy of oaks out there. I'm going to shoot a little video about, which is really cool. But anyway, I got to mile marker. I did 39 miles on that stretch and realized I still had the keys. So being a good realtor, at first my instinct was, I'll just drive home and I'll FedEx it. And I was like, that's kind of not a good thing to do to the other realtor because they don't have a key now to the property probably. So I drove back to 39 miles, dropped off the key, not under the mat. I put it in the office and then I drove back home. Anyway, I just thought that was a really interesting experience. So they don't do everything the way they do things down here in South Florida. They do things a little different.
Yeah, I think you can pretty much guesstimate that anywhere in USA, but yeah, you definitely got yourself a nice little experience there.
I got to
Florida
tell
Talk Real Estate isn't.com, y'all. Access to the entire team, your one-stop real estate shop. It's floridatalkrealestate.com. Of course, you're always welcome to join us when we're live on the air at 877-927-6969, especially if you're out in Okeechobee County and you have a little something to say to Jimmy D. 877-927-6969.
Give us a call. Hey, Francis, thanks for stopping in like you do every week. I hope you're doing well. You stay dry. Your house is safe. And Keith, I think you're a new person. Good morning. It's great to see you over here. Don't forget to you're on YouTube, so don't forget to like our YouTube channel and please subscribe so you get to know when we're doing our other shows. They all turn into reruns, podcasts. Everybody driving around is like, wow, I'm going to be getting out of my car and they're saying something I wanted to hear. All you got to do is go back to Facebook or YouTube and check it out, and you can find out the show and go back to the point you want to go to. So you could do that too.
We know Keith. Keith's a former client, a buyer. He's a military veteran. So what's up, Keith? Good to see you, buddy.
That's who I thought it was. I wasn't sure. You know Keith, right? We know Keith.
Yeah.
That's what I thought. I wasn't sure. That's a very common name.
Keith Miller?
Yes, that's a common name. But
it's my dude. So Keith.
Yeah. We know
Yeah,
Keith.
so he's a vet. Congratulations. He just said, no, I am not new. Sorry about that, Keith. So he's giving me crap today. People are going to give me crap because have a little attitude about Okeechobee.
I would love to get some calls from some Okeechobee County residents.
Well,
You
I
describe
didn't.
them as green acres, but not our green acres, the show green acres, right?
Yeah, exactly. Right. The show Green Acres, right? Not the city Green Acres. So wanted to just say congratulations to Dylan and Megan. They did get we put an offer from that sloppy rainy day that day. It was definitely worth the drive back because we turned in an offer, not on that property with the crazy keys. We turned on a property we turned on a different property. And check this out. I think the way this is going to work is they did give the sellers full asking price. The house has been nicely renovated, but now we're getting a new roof thrown in at the full asking price. So they're going to put on a brand new metal roof for us.
Wow.
As part of the deal for these first-time home buyers. So they have upgraded bathrooms and kitchen and flooring and paint, and now they're going to have a brand new roof. AC might be a little older, but not the end of the world. And they're going to they're definitely within their budget, Mike. I don't want to say what we sold it for right now, but well within their budget, right, Mike?
Yeah, they were actually qualified for a payment that was quite a bit higher than their comfort level. And so I always talk about like what's the payment that you qualify for, and then that's my world. And then your world is what's the payment you can afford, right? Like you got to know your budget, or if you haven't thought about it, think about it. And they were really conscious of what their budget was, and they were conservative, and I like that, right? They don't want to be what's the saying, Johnny? Like cash poor and house rich. And so they stuck to their guns, right, Jim? Like they said, listen, this is our number. We find us something. And so
So they chose to move from a different region in order to get the price they wanted. So instead of staying in Fort Pierce, Port St. Lucie area, they decided that they were going to stay in the Okeechobee to stay within their budget. So they were totally okay with that. This is a great starter home for them. It could turn into a great rental later on. They're not going to have to worry, knock on wood, about insurance for a long time because they have a newer roof and things have been upgraded. The electric panel's good, Ross, right? So they won't have any real problems in the future. So this is just like a great starter home. So please don't tell me that you can't buy a home in this market. Okay, if that's your attitude. Attitude is different than what reality is. And, maybe there are people out there that have been just totally priced out, but prices are going to still continue to go down. And in my opinion, things are going to get easier for the buyers as far as pricing. Interest rates are still the wild card for them, but waiting around, if you really need to buy a house, waiting around is probably not your best option. You're probably not going to do better by waiting. It's better to have everything lined up. I'm going to be meeting with Kellen and his fiance very soon. Now, they don't want to buy for like 4 months from now. So we have them pre-qualified with Mike. We're going to meet, set up the searches so they know what's going on in the market as they're ready to get by. But also, since everything's lined up and they're ready to go, if the interest rates get too crazy or something, they might choose to break their lease in order to lock in what they want if they find the right house. So being prepared to pull the trigger when you're ready to is much better than waiting and then deciding to put your plan together later. Because basically when you say, I'm just going to wait and see what happens, if you don't have everything else lined up and really know the market, you could miss out on opportunities. So don't do that. Johnny, if you don't mind, we're going to take a break. And then on the flip side, we're going to get right into insurance stuff because I have a bunch of things that I just want to remind people we've talked about over the years, Ross, about hurricanes and how insurance works and what's going to happen, just from an industry perspective, from one person that's in the trenches every day. Do we have enough money to cover all the damages that we're dealing with, or are we going to be socked again with higher insurance premiums? So we're going to talk about all that on the flip side.
Sounds good. And if you have a question, comment, concern, you want to jump into the mix with Ross Komarinetz with Brightway Insurance, Juno Beach, great opportunity. We got a 4-minute break. We'll get right back and we'll get to your phone calls. Dial up 877-927-6969. Now, of course, if you're not comfortable on the radio, believe me, I understand. I'm not very comfortable myself. That's why I like to direct you to FloridaTalkRealEstate.com, your one-stop real estate shop. There you have access to the entire team. These are pros. They're experts in their field, and they all work cohesively together. That's why we present you one place, the one-stop shop that is FloridaTalkRealEstate.com. You also have a hotline there. You can call it 24 hours a day, 7 days a week, answered by a live body, 888-973-7828. 888-973-7828. Find that hotline at FloridaTalkRealEstate.com. We're back 4 minutes from now. Great to have you with us every Saturday. Thank you so much for being with Florida Talk Real Estate right here on Real Radio.
The radio station that all
Brightway Insurance has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all of these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com.
And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because FloridaTalkRealEstate.com has you covered. That's FloridaTalkRealEstate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it. That's your toll-free number, 877-927-6969. If you dial it, Jimothy will answer it, and he'll line you up, and you make the call. We'll take that call here, Florida Talk Real Estate. Thanks for being with us, 92.1, 101.7 on the old terrestrial radio. Maybe you have the free download, your iHeartRadio app that makes us worldwide. And we go streaming as well on a Saturday. Florida Talk Real Estate on Facebook and on YouTube as well, live streaming every Saturday. Thank you for being with us. Us is me, Johnny C., Mike Rauch, the mortgage guy from the mortgage firm. He's with us as well. Hello, Mike.
Hold on. Wait for that weird sound. Oh, there we go. Hey,
Sorry,
Johnny, how are you? How are you this morning?
Hello, my friend. Nice to see you. Ross Komarinetz is here too. Brightway Insurance, Juno Beach. How are you, Ross?
I'm doing well. Good to see everybody.
Nice to be
Happy South
seen.
Florida.
And Jimmy D is here too. That's Jim DePola with the Florida Home Pros team with the Keller Williams Innovations. I've told you for over a decade he runs a top producing Keller Williams team. Well, now you know. It's the Florida Home Pros. Jimmy D, how you be?
So does it sound like Morse code when I'm typing? Is that what you're saying, Mike, for real?
Yeah, it
That's what
sounds like.
sounds-
You remember when did you watch any of the coverage with Ian with the weather people are outside and like the blowing winds and rain and stuff?
Mm-mm.
Oh, you missed that?
I don't
That's what
watch it. I don't
that's
watch
what
it because I
That's
done
what
it.
it
and I was
sounded like.
Yeah. Okay.
Right,
so
Ross?
Yes.
well, just another reason why we need to get in studio again, which we're going to be doing very, very soon. I'm hoping October 15th is going to be, it might be next week for a test run. I have to talk to you guys about that, but very soon we're going to be going back in studio again. I think it's going to be a great experience for everybody. And also we're going to be supercharging the way we're doing the Facebook and YouTube podcast at the same time. So we're really looking forward to it. The first week, if we do it, will be next week. And you're probably going to want to watch that one because we're probably going to screw things up pretty bad that week. So that could be kind of enjoyable because you might see me cursing. Jimmy, you're going to have that button ready on that show because I don't know what will happen. Yeah. In fact, I think Mike cursed for the first time last week on the show last week. That's how
I don't even know if I said the
S word.
I said shoot. Yeah, the other version of that. I don't even know if you have to block that out. Is that something you have to censor out, Timothy, these days, guys? I feel like I see it on primetime television all the time.
For terrestrial radio, yes, we do. To protect our license, yes, we do.
Yes.
I guess okay, that's fine.
But
am I wrong?
Protect the license. That's fine.
Maybe it's at like after a certain hour or something. You start to hear. I mean, I hear a lot of words that surprise me on network television.
After 10
it
p.m.
is. Yep.
Okay. All right.
And you'll actually hear some on the radio too. So, every company, every heads, they have their kind of own opinions. If you want to let it fly and roll the dice, go for it. That's not the real radio way. We don't just let everything fly and roll the dice.
Ain't happening.
Right.
Hey, just a real quick shout out, and then we're going to get insurance. Wanted to say congrats to Diane. Diane's been a long-time customer for us. We helped sell her mother's property, and we worked on another deal for her back in the day. And now we helped her. She owns a uniform company up in the Stewart, Palm City area, and we just got her an expanded office uniform storefront out in Fort Pierce. So she expanded her business up there, and she needed a very good long-term lease. We got her with Julio Acosta, who's our commercial guy here in our office right here at Keller Williams Innovations. What was awesome about that deal is Julio found Diane a warehouse that or a storefront that there was a lot of creativity to get it all worked out because it wasn't large enough for what she needed. but he worked out with the tenant next door and kind of worked the whole thing out. And then she got exactly what she needed. And I'm really happy for her. And she closed on that last week.
Awesome.
Diane, I haven't even had a chance to call you yet because I was driving around all over Okeechobee last week. So I promise I'll give you a call next week, and congrats on that. That's another thing. You were talking about the live event thing. We're probably going to be doing a live event in November for Hugo, one of our customers who just bought Mickey's Diner up in Fort Pierce. So if everything goes well, we're going to be doing a live event up there. It should be something really special. Maybe you guys can come out and see us. Yeah, it'll be a little bit of a drive for some people, but it'll still be fun. Get to see everybody get together. Maybe we can make it a thing. So we're going to have that coming up soon.
Get to see Abercrombie. Is he still doing this thing, Jimothy?
No.
Oh.
No, he's not with us anymore. We have Charisse, and I'm trying to Tatiana and Christian. Those are our 3 techs now that go out on the road.
Oh, okay. Okay, cool. So
Abercrombie, that's a name I haven't heard in quite some time there, Mike.
Yeah,
I see him a lot. I
actually texted with him within the last couple of months. He's doing really good, which is awesome. And I'm sure he looks fantastic too, Ross.
So Ross, speaking of that, hot Ross. So
hot Ross.
It slipped. Sorry, buddy.
I think I like Ross's face when we say that stuff better than what we're saying, because he doesn't look happy when we bring that up. So I think it's fun.
I was waiting for it this time.
So Ross, the first thing I want to ask is hurricane insurance versus flood insurance, right? So back in the Keys during Irma, one of the big problems that the homeowners had out there is the 2 insurance companies fighting over which one should be responsible for the damage. And it took very long time for that to get settled, and people were left homeless for extreme long periods of time and very vulnerable. For some of them, more than a year. And it got really crazy, and mortgage payments were involved because a lot of these things had mortgages, and it got very complex and everything. And I read a report that said that only 14% of the homes in the Fort Myers area, only 14% of the homes in that general area that didn't need flood insurance, that got probably flooded out, only 14% of them had flood insurance that didn't have to have it, right? So we saw all that stuff get wiped out. So tell us the difference between the 2 things and how they resolve it in real life, like how that gets resolved.
Well, how they resolve it in real life, that's a very difficult question that is on the other side of the business with claims and
I see
that sort of thing. But the way that I kind of define it is flood insurance is water entering your home at the ground level. So if you're sitting at your front door, watching it rain, and you see a puddle at the bottom of your driveway, and then next thing you know, that puddle's getting bigger and it's halfway up your driveway. And then next thing you know, you're standing in ankle deep water inside your home. That's going to be flood damage. If during a storm, the roof gets ripped off, or a window is breached, or any opening is breached and it rains inside, that's going to be your wind, your hurricane coverage. So that's the way I kind of explain it when people ask me about flood insurance. It's water entering the home at the ground level.
Does it matter, Ross, if the rising water is due to a hurricane?
No.
Okay. So people who had what they call the storm surge, whatever, they basically just got inundated with water because of the elevated levels. That's your flood policy.
That is your flood policy. Yeah. Mm-hmm.
And if you don't have a flood policy, your hurricane coverage is going to say that's not us.
Exactly.
Wow.
And then let me ask you this. So let's say that your house blows away. So that happened over there, right? We saw all those pictures where there's just a foundation and that's it. Let's say that you didn't have flood insurance, but you had hurricane insurance. Do you think the hurricane insurance is going to cover it? Because chances are of the hurricane actually blowing it and making it foundation clean, if you will. That probably isn't going to happen with a hurricane. A hurricane's just going to mess up the house and leave it there.
Well, it depends on how hard it's blowing. I mean, those storms can completely flatten a house. That roof gets ripped off. Whatever, there's a breach there, that wind starts swirling around and it just tears it all apart and it's gone.
Yeah, but it usually doesn't go away. It usually still there, like just in crumbled pieces everywhere. It isn't like wiped clean.
Well, I mean, and then if the flood took it away, what knocked it down was probably the hurricane, but the flood took the debris away. It's still hurricane. At least that's the way that I view it. Again, each claim
once the policy claim people come in, it's going to get crazy.
And each claim is different. It's unique. There's no hypothetical. You can't call an insurance company and run a hypothetical claim by them because they'll tell you we don't deal in hypotheticals. But logically, the way that I see it is that if the house is gone, the chances are the hurricane, the winds are what knocked it down.
Okay.
But there's a chance, and this hurts my heart so much. There's a chance that some of these poor people, the storm surge, the water's so strong that it kind of broke their homes down, and pieces of it have gone away. But there's a chance they may be in a lockdown, drag out fight with their insurance company because they don't have flood insurance. They only have hurricane coverage, trying to determine hey, it was the hurricane that did this, because I guess the companies could be like, no, that was the storm surge. The power of water is what destroyed your home. That's not covered under your policy. It feels like that might be the future for some people.
It could be. I hope with kind of today's insurance environment, the insurance carriers taking a beating with, claims and lawsuits. And, I'm hoping that they'll at least go out there and, start paying claims so that people can get back into their homes and start the rebuilding process, and then maybe shake it out later. But I don't know. We'll see.
Yeah, that's scary. It's a long road ahead for so many people, but that's the devil's always in the details. But those details are pretty blatant. I know I've had these discussions with you. That's a completely separate policy for my flood insurance. So, information is power. Go to FloridaTalkRealEstate.com. Get information from some of the best.
Yeah, I got an email from one of my clients that said, "Hey, I think I've had some water intrusion, flooding type events," and I was like, "Oh man, let me double check. Oh shoot, he doesn't have flood." I was like, "Oh man, that's not good." And then I looked at we always send out, "Hey, would you like flood insurance?" And it was checked no. And I was like, oh, man, I don't know why people check no. You should always want it.
It is relatively inexpensive too for the most part, especially if you're not in a flood zone. I know for us, flood insurance was it's relatively inexpensive. We have opted to pass on it at this point continuously, but things might change. I'll tell you, just a couple of hours of downpour that we got on Tuesday night, I had water accumulation in my spot. We've been there 8 years last month. We had water accumulation in just 2-3 hours that I've never seen, through hurricanes. Scary. And if we had, I don't know, 6-8 more hours of that kind of downpour and accumulation, I might have had water lapping on, and we're elevated.
Was it your front yard or the backyard? The front side yard?
Front. Yep.
The front. That's what I figured. Yeah, I could see that with your neighborhood.
Yep.
Well, but remember, we got saturated. I forget what day. So the hurricane came through
that's true.
on, was it Wednesday? Was the main day for that? But yeah, we got saturated. Heavy rains right that weekend, wasn't it, Johnny?
We did, yeah.
And then just 6 inches dropped on it.
Just that chunk of hours on Tuesday was enough for it to stack up really quick. If we had any more consistent accumulation, I'd have been in a really, really panicky position for sure.
When I lived on that lake out in Wellington, I had flood insurance. We paid for the flood insurance, and it was very unlikely that lake was going to flood out. But why not? I mean, it was pretty inexpensive compared to the house that we owed and the damage if it happened. it would be, even if you had that insurance for 10 years and then you needed it, you'd get all your money back.
I mean, if you're
on
not
that.
in a flood zone, it's, $500 to $600.
Yeah, it's like, why wouldn't you do it? It's like, I know people don't like insurance sometimes, but it's silly not to do that. In my opinion, you should always get the flood insurance. Very rare exceptions. So that, because it isn't just you have to be near the ocean. If you are on a canal that gets flooded out, or if you have a lake in the backyard that floods too much, or you're just in the acreage and your lot doesn't drain properly, all of those things would be issues that, you would need flood insurance, even though you're not in the quote flood zone, So
yeah, I had little, I probably had 6 or 7 little ponds, standing water in my yard, several inches deep, just because the grounds were saturated, so that water just sits up on top, and it's not necessarily a drainage problem. It's just it takes some time, right? It takes some time for that
percolation,
soil.
Yeah, that percolation that you need. It's just kind of crazy. Now, the thing I'm wondering is, we haven't fixed our insurance issues yet. We had that chance earlier this summer where they had this special legislation that was supposed to come in and fix the insurance. We've been told first of all, we lost 6 insurance companies in the state, which I think Ross said you've never really seen. I think the most ever was 3 or something back in the day, right?
I mean, it's all recent too. It's all recent.
So we lost six companies, which means there's less people available to insure down here. Okay. So we've been talking about how Citizens Insurance, which is the insurance of last resort because it's backed by the state of Florida, that has quadrupled in policies. We're almost at the levels we had it when they started trying to slough everybody off back in the day. I don't remember that cycle, but there was a period where we were at like over 1 million policies, and I think we're there again now. We were down as low as to like 300,000 policies, and now we're at over 1 million. Some rough numbers, okay? Go ahead,
Hey, Matt, just real quick I thought I heard a report, I forget what it was, maybe like NPR or something, where they were talking about Citizens, and they threw out a number that surprised me, that Citizens still only has something, it was like less than 20% of the policies in Florida.
Yeah, they're at like 10.
10%, so that Citizens writes
12.
Yeah.
Ah,
that really seems like a low number to me. So I guess that means outside of South Florida, there's more players out there. Is that?
Well, I mean, we used to have, there's still a lot of carriers that have a bunch of policies that aren't writing new business. They're just not taking new business now, but they still have a bunch of policies from the last 20 years on their books. So
back in the
Universal, I think, is the number one. State Farm still has a lot of policies from a long time ago. And then sprinkled in with all the other carriers.
I think it surprised me just because I know over the past, year, especially maybe even 2 years, you've said like every policy you're writing is almost Citizens, right? You're probably writing 90% of your policies end up going with Citizens, but we're kind of localized, right? And so there is the whole rest of the state, and I guess there's just still legacy policies out there. So
but Citizens has been increasing a lot.
Yeah.
And then on top of it, the reinsurance the reinsurance companies came in, and those are the companies that insure the insurance companies, and they're really the big boss, right? And they came in and said, "Hey, you've got too much fraud going on down there, and we don't want to insure Florida anymore. We're leaning towards not insuring Florida homeowners policies anymore." Then this company called Demotech, which is a rating system to determine how healthy insurance companies are that are currently operating, and that rating is used to help people get mortgages. That company was talking about downgrading the Florida insurance companies, which we talked with Paul Krasker a couple of weeks ago from the law office of Paul Krasker, said that could accelerate mortgages or make them buy some kind of policy that would meet that rating standard. it's a very sticky kind of mess we got going on right now. And now we have a big one hit, right? Now we have a big one hit. And I'm wondering, is this going, what do you think in the future? Because you've been through other hurricanes before, big ones. What do you think is going to happen with the trying to get insurance policies for like new customers trying to get insurance policies? Do you think it's just going to be like it is now, or do you think it's going to make it even more complicated? Or
I think it's probably going to get a little bit more complicated. Like we had one company like 3 weeks ago say, hey, we're going to reopen and start accepting new business effective October 1st. So today. Yesterday, they sent an email out that says, everybody paused writing new business for the storm, whatever. And they said, you know what? We're actually not going to reopen, and we're just going to focus on our existing policyholders. So here we thought we were going to get a new carrier. And yeah, we wrote a couple policies with them, but they're not coming back in. They were going to dip their toe back in the market a little bit and see what they could take. And they've said, you know what, we're not going to do it anymore. So, unfortunately, there may be another tightening, but we're already tight and we're already writing with Citizens, and we just got to hope that we don't get another big one.
The thing that worries me is that, like, there's a timeline, Ross, and this is a part of the fraud conversation. Like, you can make claims for storm damage X number of years after the storm goes through, right? And so what would they shortened that, right, from 3 to 2 years or something? Is that right? So now we've got a new 2-year window that just opened up, right? And so you're going to have these same. There obviously will be honest brokers and honest actors, but there's also a space for dishonest actors, and they've got now, right? Because any damage that was caused by Ian, Jim, I think you were going to ask about this. So we're on the East Coast. We didn't take a direct hit, but there was wind damage, right? That would be covered under an insurance hurricane or wind coverage right now. And so now we've got a new 2-year window for, canvassing neighborhoods, looking for cracked tiles, looking for loose shingles. Like, that whole thing opens up.
Yeah, absolutely.
And some of it, like you said, is legit. I know one of the people I know, she just was in a situation where her roof started leaking from the winds and the hurricane during the hurricane. And she's in an HOA community, homeowners association community. So what she was told was the HOA said, what you've got to do is go bring out an insurance agent or an adjuster from the insurance company saying that this was related to the wind, and then give us that report and give it back to us, and then we'll take care of it. So that's how they left it with her. So, but that was a legitimate, definitely wind damaged leak. She was there when it started and everything. She was there when it started leaking. So
does that sound right, Ross? If you have a master policy, you get your own adjuster out there?
Well, you want to file the claim with your company. That way, your like if you obviously she's going to have interior damage, since you noticed leaks and everything like that. So you need to file it with them so that they can take care of the interior damage. And then then the other part of it, they'll subrogate to the HOA and the HOA's policy.
So step one is call your
you always want to call
policy holder or issuer. Okay, interesting. So if you're in an HOA community with a master policy that covers your exterior, and assuming you have some sort of interior evidence of the leak, right, or else you wouldn't know about it, you call your interior insurance policy, and then they'll take over, kind of.
Yeah.
What do you think? What do you think about? Can the Citizens Insurance Company back all the damage that's out there? And I know nobody has any really idea what's happening right now, and I'm not, so we're just kind of guesstimating right now, really guesstimating, but do you think there's enough money there to handle what just happened?
I think between their reserves and their reinsurance, I think they should be okay. But we'll see what happens when it finally shakes out about how much is real damage. Because right now it's all estimates, and like you and I had the conversation where a lot of those, damage estimates include flood insurance and include commercial, and so
and cars. You mentioned automotives and boats and all of that. Yeah. So let me ask you this though. This is how I understood what I read in an article on it, and tell me if this sounds like it works this way or not, because I might have been incorrect. It was I had to read it like 3 times. So if citizens ran out of money, the first thing they would do is go back to the citizens only policy holders and ask for a 15% premium of their annual bill. So what they said is the average person at Citizens, according to the article, was $3,000. So the first thing is everybody would pay $450, right? $450 based on that roughly, or 15% of their premium, but the average is $3,000. Then if there isn't enough money, they do round 2. If there's not enough money, again, they do round 3. And then if there's still not enough money, then they go out to the people that don't have Citizens. And then they ask for some amount from them. And if there's still not enough money, then they go after, like they said, it was like $60 on every car insurance policy. Is that kind of the way it would work?
Yeah.
There's one more step after that, Jim. They do a GoFundMe. That's the last
on the
step.
corner
We
with a
should just
sign.
do that. We probably
Bake
make
sale.
more money that way.
Have a bake sale.
Yeah.
Car wash.
That would be the way it would go, though, right?
Yeah, that's the way it would go. The citizens policyholders get assessed first. Once they cap those assessments, then it goes to other homeowners in Florida. And then once those are maxed out, then it goes to property and casualty auto policies.
So is there a chance that we could get like double or triple whammied if you're with Citizens? Because they were already planning on increasing, right, everybody's policy or their premium for the exact reasons we're talking about, right? To put more money in the coffers. Wasn't that already in play?
Yeah, I mean, all the companies are always reevaluating their rates, and everybody's always having rate increases. But whatever your rate is right now, that's good till your policy ends. So it's not like when Citizens says we're going to increase rates October 1st, it's not like your policy automatically goes up. It would go up at renewal, right. But again, it's capped at how much it can go up at renewal by state law. So yeah, it would go up. And then, hopefully we don't have an assessment, but you would have to pay that assessment if you wanted to keep the policy.
And I think you had mentioned this, that a lot of the damage, it should be, or hopefully is, for Citizens policyholders, flood related, right? So that's most of those are going to be some sort of national FEMA based claim, right? And so maybe the Citizens, claims just aren't through the roof, right? The flood's going to take up the majority, hopefully. I mean, I don't know.
Well, I'm glad you brought up FEMA. So how does FEMA step in and kind of help fill in the gaps a little bit for folks, Ross?
Hey, Johnny. Yeah. I don't mean to be rude, but let's go ahead and take the break right now. I want to continue this. This is great stuff, but I do want to get to one break in here.
If you want, it's up to you.
Oh, okay, cool. Okay, I just want to make sure. No, let's go ahead and go through. So go ahead, Johnny. I'm sorry.
You want a break or no?
No, let's go forward. We'll go
Ross,
forward.
how does FEMA help to kind of fill in the gaps for some of these people? As Mike mentions FEMA, I think it's relevant.
Well, flood insurance is FEMA. So FEMA is the one who pays those claims out. That comes from their money through the National Flood Insurance Program. Now, also, if you do have flood damage and you don't have flood insurance, you can get a loan through FEMA to repair your damage. But it's a loan. You're paying that back. But that's the whole flood insurance basically is FEMA. Right. So that's how they're involved. But as far as filling the gaps, it's there. You can apply for a loan and for repairs. But again, it's a loan. You've got to pay that money back.
Well, hey, that might be a bright spot for somebody who had flood damage who doesn't have a policy. So we might want to talk a little bit more about that.
Yeah, and is that something that you because I mean we've talked about this in the past as storms have come through, but I'm guessing, like I heard I think Governor DeSantis was saying the other day there was already like 30,000 people that had applied for FEMA assistance. That's like first come first serve type scenario where you got to get on that list. The longer you wait, the deeper your wait time is.
Yeah, I mean, it's just like anything. You got to go through all the paperwork, and it's not instantaneous. So yeah, I mean, it could be a while. So yeah, if you don't have flood insurance and you got flood damage, you want to definitely reach out to them and try and get on that list and get your property evaluated.
Yeah, and I know there's a lot, especially if you did get really hampered by the storm and you have a lot of damage. There's so much going through your mind constantly. Your life is in complete upheaval. It's hard to kind of compartmentalize and prioritize what you need to be doing first and foremost. Getting the insurance squared away and what your future looks like. That's, man, all that cleanup's going to happen. It is, but take the time to make those phone calls and dig out those websites. And, we'll see if we can maybe put some little one-stop informational hub for you. It's possible we might be able to do that on Facebook, at least a couple of links to lead you in the right direction. And of course, always don't hesitate. You go to FloridaTalkRealEstate.com. We got pros that do have expertise and can at least give you some guidance or, lend you their expertise in time of need. FloridaTalkRealEstate.com.
So as far as the premiums, paying the extra premiums because the state doesn't have enough, that's you just think generally that probably isn't going to happen because of reinsurance. Thank God, that's what reinsurance is for, right? But how do you think? My attitude is the legislature has to step up and do something about this because they got to change. They got to change the stuff that's making us the worst in the country. There's a reason why we're the worst in the country. It isn't just by happenstance. It's because the way our regulations are set up for filing claims. And I do understand it's probably lobbyists mostly, but it seems like a pretty easy fix. I don't know why people need 2 years to file a claim after a house is damaged. If your car was damaged, do you wait 2 years to get your car fixed? You know what I mean? I don't understand why people are allowed to do that or why they have the right to do that.
I mean, I think the biggest thing is disincentivizing attorneys because that's all it is. Mm-hmm. You got to disincentivize the attorneys. And unfortunately, most of the politicians are attorneys.
Mm-hmm.
Well, and so I'm guessing this is so. On these situations with the attorneys, is it kind of like we don't get paid unless you get paid type scenarios, right? So people aren't hiring their attorneys to do this and paying them, hours that are logged. They're getting 40% or whatever their collection is. Is that how that works? So maybe they just make it so that you don't get a rake of the outcome. You got to bill hourly and people have to pay it as they go. And then you find out who really has interest in doing this.
Yeah. I mean, somebody has to have skin in the game, if you're going to sue the insurance company.
Yeah. Because if you have nothing to lose from a homeowner side, you're like, yeah, go for it. We'll see what happens. I'm not going to pay you unless you get me money.
And a lot of people don't even realize that's what's happening. They just go, oh, you're going to handle my claim for me. Thank you. And they sign a piece of paper. And then, they're involved in a lawsuit with the insurance company.
Yeah, and the whole idea of the company doing the work to also be the adjuster.
Yeah.
I don't know. I mean, I'm not an expert on this stuff, so there might be a great argument for that in favor of it, but it just seems like such a huge conflict of interest. And
I mean, it's a good thing to be able to have recourse against the insurance company for sure. To hold your feet to the fire. But unfortunately, there's people that are taking advantage of it. Just like in any sort of situation, there's unscrupulous players that are taking advantage of it.
If they don't fix it on their own, the bigger powers like the reinsurance companies just going to come in, or the ratings agencies, or both, are just going to come in and they're going to clobber us even worse than we're in a situation now. They can make it so much worse. And what I'm wondering is, even if they do pass legislation now, we've already had a big one hit. So it's all going to be after that, right? So it's going to be from this point forward, this is how we're going to do it. But we just had one of the top 5 hurricanes hit us ever, right? And we're going to have to deal with that mess, even if they, quote, fix it. They should have fixed it last summer when we didn't have anything on the horizon. I really thought they were going to fix it. I thought they were going to do something, because I don't think it's that hard. I think they know exactly what they need to fix, like Ross said, right? They got to stop the litigation the way it's done, too much litigation. And they know exactly what they need to do to fix it, but they're not. And it's going to affect us as homeowners very, very seriously. It's going to affect our market. And real estate is such a strong factor in our economy,
I mean, I've said it before, but Florida accounts for 8% of property damage claims filed in the United States.
Yeah.
They account for 80% of lawsuits associated with property casualty claims.
That's so crazy, because, I keep thinking about California, right? So California, they got the mudslides, right? They got the fires, right? And those fires to me are the closest thing equivalent to us with the hurricanes, right? But they don't have any of the lawsuits, maybe because it's a lot clearer because it's a fire and there's nothing else involved. But I don't understand. They have to have as much damage. Like, I bet you if you check California's claims, they're probably 8% or more.
Yeah, but it's not
80% of the lawsuits.
It's a people situation. It's the people that are doing it.
Yeah.
It's not just the events,
Yeah.
They call it social inflation.
Huh.
That's what
are the laws on the books different in Florida than they are in those states, as far as
maybe
what Ross is talking about with the disincentivizing or incentivizing the legal part of it, like the lawyers?
Probably, but also
assignment of benefits.
If your house burns down, your house burns down. It's not like a fire goes through and then a year and a half later you go, oh, hey, I had fire damage.
Right. Exactly.
Exactly. And then you got to drag it out. It's not like you're suing your insurance company a year and a half later going, oh, now I have fire damage and you don't want to pay. It's like, no, you knew, if your house burns down, it's gone. Or if half of it catches on fire.
There is a reason that they had a length of time to begin with, Jim. And I think it is because homeowners just assume everyone's operating above board. They don't know that their roof is damaged from that storm, and they don't know that there's water intrusion until later when it pops its head up, right? And so you might have a leak at certain area of your roof, and you just don't know about it until it gets bad enough, right? And that could be a year down the line, right? So there has to be space for honest brokers, right? So you can't cut them out, and that's why there's such conflict at maybe I'm sure it's about money, right at the end of the day for somebody, but you have to leave the door open for people who need to make legitimate claims, and you can't let the insurance companies just say no, right? Like, oh no, we're denying that, or we're only going to give you a tenth of what it's going to take to repair it. And so that's the line that's being walked. But obviously, there's a major issue. 80% of lawsuits nationwide come from Florida. Crazy.
Yeah,
crazy
that's just it's a crazy town. That's
and the other crazy number.
Florida.
The other crazy number, Ross, and I don't know how accurate the percentages are, but how much of claims go to fixing the damage versus go to lawyers?
Yeah, if I remember, it was like $15 billion associated with claims that resulted in lawsuits, and only 8% of that money went to actually fix the damage.
Oh my gosh.
70-something% went to plaintiffs' attorneys.
Wow.
Yeah, you just ran a big old highlighter over the problem right there. There it is.
Yep. So let's hope that they get their stuff together before this gets worse and worse, because it isn't like it's an unseen force. This was a train coming at us And we knew it, and we saw it way down the tracks. This isn't some blind side, happened. This is something we got to fix.
And I was going to say there's one more, and I think Ross said it, the social inflation. At some level, this is homeowners saying, "Oh, I can make a claim for that? Okay, yeah, let's do it." Right? Like that's also
You get a free roof. Thanks.
Yeah, new roof from Ian from 2 years ago. Oh, yeah, sounds good. Right. And so you get a whole neighborhood doing that, or a whole community, right? Or the whole, region. And that's certainly part of the issue as well.
Well, and eventually, like, as people just get beat up and beat up and beat up, and there's just, they don't see how it's getting fixed. Eventually, they're going to go, well, screw it. I'm going to do it too.
Yeah.
Yeah.
If I'm paying, I might as well, right? That's how the mentality is going to shift.
Mm-hmm.
Even people like me that really, I'll cut off my nose and spite my face. I'll make terrible decisions because of principles, because I care. Eventually, I'll get to the point where they just keep raising me and raising me and raising me. Like, screw it, put a new roof on.
Yep.
It's kind of capitalism at its finest, right there, right? Like everyone kind of making decisions that benefit them the most, but hurt the community in general, right?
Yep.
Without getting political.
Me or we, I guess, is how it boils down, right?
Jim threatened to get political when he was talking about the puddle in his driveway. I'm not sure what that was, but I almost crossed the line there. So let me back off.
I was talking about climate change. The whole climate change thing, and like whether it's climate change or not climate change.
Our governor said we have a once in a 500-year flood. I think he even agreed to climate change in his own way.
Yeah, and what I'm wondering is if that, when I read that 500-year, I was like, wow, haven't even heard of the 500-year thing before, right? Heard 100-year, but not 500-year.
No,
now
that's
I'm wondering. Now I'm wondering
a flood zone rating.
Is it? Is that what it is?
It's a flood zone.
Yeah, 100
flood
year.
zone X, right? Flood zone X is once in a 500-year window.
I don't know.
Am I wrong about that, Ross?
Well, flood zone X is that's you're not in the high risk for flooding,
which I think is
500.
They base it
defined
on
as the once
years.
Every 500 years. So we just had it, guys. That's the good news. So we got another 500 to go.
Well, my thing is I'm wondering how more common those kind of storms are going to be. And that it won't be 500-year anymore. It'll be 100-year. You know what I mean? Like it's going to be more and more common, because that's what the weather people are saying, is that we're going to get stronger and stronger storms as things continue. So we'll just have to see. But hopefully they're going to recover over in Fort Myers and all that devastation all over there. But I wonder how different it's going to be, how much things are going to change over there as far as construction, redevelopment, changing the way the neighborhoods are, things like that. Because you know what? Key West didn't change that much. I thought Key West was going to go through, or the Keys, I should say, was going to go through a major change after Irma. I thought they were going to go through a real estate bubble pop, specifically just that little area. Exact opposite. It grew stronger and bigger, and people bought all those damaged homes that were torn down and put up multi-million-dollar homes out there and didn't even think about it. Wasn't even a blink of the eye. I was very surprised about that.
Down in the Keys, don't they already have? Doesn't new construction? Aren't there certain elevation requirements, whether you're building on stilts or maybe you have to elevate your lot? So that, the new requirements probably are trying to keep up with these types of things. Right? It's just the older construction that's, at risk.
Yes, and then the septic systems is a big deal out there, and the water table and everything. So that's a big problem out there too, right? So that affects new construction. So when you're rebuilding, you got to deal with new codes for septic systems and stuff out there. So it's very complicated, but it hasn't affected them at all. They just went right back to the things the way it used to be. And I'm wondering, it's going to be interesting to watch, like Fort Myers and all those coastal communities, how they're going to decide how they're going to handle their stuff. And I don't know, if you had those stilt homes that they have down in the Keys now, if you had that storm that they just had, would it make a difference? Do you know what I mean? I don't think so. I don't think so.
I don't know how high the storm surge was. Like, what was the highest that it came up? But those
I
stilt
heard
homes
8 feet, but I'm not sure.
Yeah.
Yeah.
So I wonder what the minimum stilt height is. I feel like 8 feet is low.
That would be low, but still the storm surge hitting hitting the structure like that, it tore down hotels, right? So I don't even know, like when you build it to the new standards, if it's even going to be able to compete with the storms that they say are going to be like more common when they do come. So it's going to be very interesting to see all this. It's just going to be super interesting. So my vote is, I was telling my buddy this, Doug, one of my best friends, last night. He wanted to buy an oceanfront property like five years ago or so. So I joked with him. I guess this is about 5 years ago. So I joked with him. Don't put 20% down. Get the longest loan you can, because you're never going to pay it off, because the house is going to be underwater before your mortgage ends. And I was kind of half joking with them. So I was like, get the longest mortgage you have, because you're never going to pay that thing off, right? And you don't want to. Let the bank finance it, because it's not going to be around forever. Well, now it's not joking around that much anymore. My beach up in Singer Island, gone. Just gone, destroyed. Right. They've always had problems in my area of the beach anyway, but oh my God, it's really bad out there now.
A lot of beach erosion pockets, people all up and down the East Coast, they know their beaches. They were like, oh, the beach erosion is terrible there. I know, like up on the Treasure Coast, I've seen pictures where it's just cliff. And we weren't on the bad side of the storm, just cliffed out beach erosion.
Mm-hmm. Yep.
Golly, it's just gone.
Yeah, it's crazy. Hey, I want to get into the market, because there's so much stuff going on, and talking about tips for helping buyers and sellers, and talking about how being able to be very reactive very quickly is very important in this market, and how Mike helps me with that with my customers all the time. But for the next 9 minutes or so, let's take a little break from the doom and gloom of insurance and everything we've been talking about, because we're going to get into mortgage rates, which isn't going to be much fun either. So I thought it would be really important. The market is just talking about changes in the market. And one of the things is people need advice on both sides a lot, the buyers and the sellers, because it's such a changing market right now. But the one thing I want to talk about today is how important it is, especially in today's market, more than ever, to make sure that your house is on point when you're ready to sell the house. And if you don't do that, you're really, really missing out on potential money. And I always tell my customers, you can expect usually 3% more on a decluttered, staged house than the same exact house that's not decluttered, not staged. 3% more for the same exact house, right? And it's a psychological thing more than anything, because it's the same exact house. It's just what stuff is in the house when you're looking at it. But sellers for so long now have been able to put their house on the market and not really do anything to it, and expect that buyers are just going to buy it anyway, and they're going to give the seller what they want. That's not the market we're in anymore, guys. There are some parts of the market where that's happening, and it's neighborhood by neighborhood, street by street, and literally street by street in the same neighborhood. If you have two houses in the same neighborhood, they're both the same model, okay? One built the same year. One of them, the people decluttered their home, they cleaned it, everything looks like on point, the photos are beautiful, the videos are great, and when people walk into the house for the showing, they feel like the sellers gave a darn, that they actually made the beds, or there's no dishes in the sink, and even the kids' beds are made, and all of that. That goes a long way to getting your house sold, compared to another house where the house is very cluttered, there's stuff everywhere, the house isn't as clean as the other house, okay, but the same exact house, okay? And a lot of times they're going to pass on your house, and they're going to take the other house and make an offer on that and try to negotiate. And even if they don't get the price that they want, they still might buy that house instead of coming to your house to try to buy your house, because psychologically they like the other house better.
Or it could be an indicator of you want to know, like if you're buying a used car, right? You want to know how well did the owner treat the car. Right. And so it's an indicator of whether somebody has taken pride in their home while they were living there versus somebody who's just living there.
Do you want to know my two fastest ways of figuring that out? What I
Okay.
do is I go underneath the kitchen sink and the bathroom sinks, and I open up those cabinets where the pipes are.
Okay.
And then I look at the cabinet on the inside to see, is there any mold in there? Has the cabinet bottom collapsed? Is there any damage or water leaks in the past or current water leaks? Because you'd be surprised at how many people's kitchen sinks are leaking right now, right?
Ah.
Like
The
little
parts will
tiny
blow
leaks,
out.
right? Yep, you get that curved board, right? So
It's nothing you can't cover up with little contact paper, Jim.
well, people do that, but when you see that, usually I knock on the wood, right? And usually the cabinets, if they have warp like that, you can tell anyway, even after they do that. But I always check the plumbing sinks, right? The openings for the plumbing. And the other thing I do is on the shower or tub walls where the valves are and all the faucets and everything is, I go over there and I gently, if it's a shower stall, I'll tap with my foot or I'll tap with the heel of my hand against the wall to feel if it's solid or not. Because a lot of times with the older houses or something, the valves will leak behind the wall and you just don't know until it all collapses. So those are the two ways. If you see that those things are pretty solid, especially the kitchen sink, bathroom sink test, usually people have taken pretty good care of the house if those are in really good shape, especially if they're older cabinets and they're in really good shape. I remember just looking at one recently for one of my customers, and the cabinets were 30 years old, but they were excellent condition. Excellent, right? So you didn't have to rip them out. In fact, they're probably better material than they make today. And resurfacing might be a good way to deal with that kitchen because the cabinets were so great. But that's a great way to check it. So one of the things, so I got a little laugh out of this article that came from Inman News, which is a real estate like news network, and it says, "Clean your house, photographers tell home sellers in new survey." Right? And I thought that was funny, right? I should have done that when we had Seth from Virtual One Photography on a couple months ago. We should have asked him, give us tips that sellers need to do when they're selling their house. And the number one tip the photographer said in this survey was clean your house, right?
Wow.
Clean it, just clean it, right? So it's really important. Clean house is so important when you're selling the house. The photos, high resolution photos pick up everything. So when your house isn't on point, everything gets picked up. So it's really important to clean everything. I always tell people, don't throw money into the house. If you've got carpeting that's, 10 years old and then you should have replaced it, 5 years ago, replacing it now isn't necessarily the best move. But what is the best move is make sure everything's completely squeaky clean and decluttered so that everybody can see everything so that they could go, oh, I really like this place. I got to rip out the carpeting. I wanted to get new flooring anyway. And they don't make a big deal about it. But when the house is messy and you're opening up the doors and like the bifold doors falls off the track and, or the stuff starts falling out of the closet as they're trying to open up the doors, and the bathrooms look like, they need some spick and span, in the tub and stuff. The toilet bowl flap is open, right? When the people come to see the house. All of that stuff psychologically, even if they want to make an offer on your house, you're not going to get what you would get if it was cleaned out. And what national surveys have shown from the National Association of Realtors is about 3%. That's a lot of money.
It is.
A $500,000 house, $15,000. $300,000 house, $9,000. $200,000 condo, $6,000. That's a lot of money. So what I always tell people, spend the time to go ahead and stage the house right. I just had a conversation with a couple who I really, really like, and they have a bunch of kids, and it's very hard to get everything on point for the photos. And one of the spouses is saying, let's just get the house on the market. Let's shoot the photos and get it done, and we'll finish cleaning up later. And I'm like, no, please don't do that. Let's wait. And they're very concerned because the interest rates are going up. They have a need to move. And I'm like, please just trust me. Take the extra week if you need it and do it right. Because once we shoot the photos, that's the first time that people are going to see the house is the photos. That's the first showing. The first showing is not when you not when you walk in that front door. The first time is when they see the photos and the 3D virtual tour and the video, if your company is doing all those things. And you got to be on point with that to get them to want to come to your house.
That's right.
Right? So please do yourself a favor, declutter, clean your house. Just wanted to take a break on that. Listen to the photographers, they're right. We'll go ahead and take a break, Johnny, and then on the flip side, we're going to talk about how we're so 2007 and talking about how to win your way through these interest rates and like how to live in 7% world.
All right, we're going to take it back. How far back? Well, evidently to 2007. We're going to do that 4 minutes from now. Quick break. We get back to it. Always want to make sure you know Florida Talk Real Estate is a .com. We call it your one-stop real estate shop. You have access to everybody on the radio show and more, the whole team. And we don't get to hear all the voices every Saturday. There'd just be too many people on microphone for 2 hours of infotainment. But we have all your expertise all in one place. You can reach them all. FloridaTalkRealEstate.com. These are pros. They're experts in their field. They're all amazing at what they do, and they work cohesively together. Find them all at FloridaTalkRealEstate.com. 4 minutes from now, we get back at it and put a bow on a Saturday. Of course, hopefully you're going to be sticking around. The locker room will be taking over at 11. We'll get you there before you know it. 2 hours of infotainment zooming by every Saturday with Florida Talk Real Estate right here on Real Radio.
Has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Got about 25 minutes left. You're welcome to join us at 877-927-6969. Questions, comments, concerns in the world of real estate? Go ahead and jump on. Jimothy will line you up. We'll take the call if you make that call. I'm Johnny C. Mike Rao, the mortgage guy from the mortgage firm, is with us on this Saturday. Hello, Mike.
Hi.
Hi. Ross Komarinetz, Brightway Insurance, Juno Beach. Hi.
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 Sorry, we're about to talk interest rates. That's why I'm not so enthusiastic.
You're not feeling so much zest. Yeah, understand. Jimmy D's with us too, y'all. It's Jim DePola with the Florida Home Pros team. That is a top producing Keller Williams team. You'll find them at Keller Williams Innovations. Jimmy D, how you be?
Hey, good, everybody. Happy South Florida. We're going to be talking about interest rates a little bit in the market and what's happening in here. Just to give you an idea, it was July. Let me see. Hold on here. Yep. Okay, wait. July 21st, 2007, we were at 6.69. And then the next week, we were at 6.73. Okay. Today, we are at, well, when I say today, we're using the Freddie Mac rate, which is what we used to base everything on. We're at 6.7%. So we were at basically July of 2007 was the last time we were at rates this high. We went up 0.41, which is pretty significant in 1 week. That is not the highest increase we've had for the year because I'm wonky. I know this stuff because I have to talk about it every week. The highest was 0.55, which is when whenever we jacked up the Fed reserve rate for the first time to 0.75. That first time we did that, that's when we jumped up to 0.55. Now, the good news about that was back then, even though we went up to 0.55, over the next couple of weeks, it flattened out and we lost about half of that quarter, half a point increase. So we really only increased it really for real over a period of several months, a quarter point, because it flattened out. I don't know if that's going to happen this time because everybody's wondering, is the Fed trying to kill the real estate market because these rates? And everybody's complaining, with these federal interest rates, reserve rates going up so much, is it just going to go ahead and kill the real estate market, just kill it? And that might be collateral damage. The two things that are probably going to be the biggest collateral damage in these rising interest rates are going to be employment and housing. Those are going to be the two markets that are going to be hit the worst, most probably, if we don't have the quote soft landing. And I was just listening to a report yesterday where everybody was agreeing, all these economists are agreeing that nobody's talking about a soft landing anymore. They just need a landing. I just want to see a way we're going to land because we're still floating up in the air, like not even close to landing yet. We're floating around like we're some kind of like, who knows, like feather.
Maybe the softest landing is on water, right? And then what happens when you stop on water? you start sinking. Right?
Yeah, exactly. Right. So
it's funny you're talking about the employment. What about employment in the real estate industry? Holy cow. With the, like layoffs in the mortgage world and real estate agents, I'm sure, are
real
struggling.
Estate agents, title companies, mortgage companies, I don't know about insurance, Ross. Are you seeing a lot of people leaving the insurance industry, being laid off in the insurance industry right now? I don't think
not
so.
in my office.
Yeah, of course. Yeah. So, so we're really seeing, that the two things that are going to be affected is employment, and the employment's going to come when people stop buying stuff, right? Which is what they're trying to do, so we can get the prices under control. When people stop buying stuff, then employers are going to have to cut back. And we're seeing that in the tech market right now, right? That's the big market that has the big layoffs right now. But even though that we're saying that right now, we're not seeing it happen. And Johnny's shaking his head the whole time I'm saying this, and I agree with him, because here's what Associated Press just came out with a couple of days ago. Fewer seek jobless benefits, hiring solid, right? Last week's jobless claims fell by 16,000. There's 193,000 reported to be asking for unemployment, and the month before was revised down to barely 209,000. And so what they're saying is right now employers are not scaling back on their employees yet, even though they're complaining about inflation. So they're not at the point now where they're going to be laying people off. But I am seeing some soft data that buying is starting to slow down a little bit. I didn't read the article carefully enough, so I don't want to talk about it too much, but I did read a few paragraphs. And one of the crazy things I read that was saying they're starting to see that buying is scaling back a tiny, tiny bit, not a lot. So it's not a trend yet. So we'll see. But until that stuff starts happening, man, we're going to be in some pain, because I think the Fed, it's another 3 weeks. They're going to be meeting again. And they have 2 more times to raise rates this year, and they're going to do it. And I bet you it's another point. If things continue the way they are right now, I think it's going to be another 0.75.
So they're waiting for a terrible jobs report.
Sorry, Mike, go ahead.
I was going to say they're waiting for a terrible jobs report before they stop pumping up the rates.
They want to see the jobs slowing down a lot and spending, and they want to see a more open job market. The job market right now is too tight, so they want to see that loosen up, and they want to see prices to start to go down, and that's not going to happen until people stop buying stuff. And they just don't want to do that right now. I just talked to my Airbnb friends. Remember I was telling you a couple of weeks ago how they were seeing these tremendous drops in vacancy or increases in vacancy rates. We were talking about that a couple of weeks ago, wondering if that was an indicator that the real estate market's changing. Well, now they're saying that they're getting more long-term leases. So both of the people I talked to, they're both getting longer-term leases where instead of staying a week or something, now they're staying a month or 6 weeks or maybe 3 months, and they're taking it that way. So there's still people wanting it.
Wow.
And I think Airbnb is going to be very strong. That Michael guy, the new listener, he might be right that Airbnb would be a great thing to have right now because of what happened on the West Coast. If you advertised out there, you probably could get people to do longer term rentals for you if you needed it.
I was going to say long-term rentals on the tradition of short-term rental is not a good indicator for the health of the real estate market, right? Because that indicates people are out of house and home for whatever reason. Maybe they're in between selling and buying. Maybe they couldn't renew a lease, but they're just like struggling trying to find a house that works from a budget perspective, and so now they're grasping at straws, finding a place to live. Yeah, to me, that's not a good indicator. Short-term rentals are turning into like longer short-term rentals.
Yeah, the other thing I'm wondering is if interest. I forgot to mention this during the insurance segment, but that might be the weakest link out of our housing market as far as getting more inventory on the market. Might be if the insurance gets affected by Ian. If insurance prices get super, super high, I think Airbnbs are going to be one of the first ones to be put on the market, all those Airbnb homes, because they're going to lose out on the profits that they're making from high insurance rates if that were to happen. And then they're going to say, well, what's the use of having the thing? Let's go ahead and sell it. And that might open up opportunities for inventory later. But that's not a tomorrow thing. That might never happen. Or it might, if it does happen, it'll probably be months and months and months from now. That's a possibility overflow.
And probably not make a huge impact on the available homes, right? I mean, what do you
think Airbnb's like 5% of the homes that are selling this stuff. It is kind of significant in a way. It really affected regular homeowners when they were competing with them during the crazy market. And we had like 36% of the homes bought cash. It really affected the regular homeowner that wanted to buy a home. Even though it was a small slice, like you were saying, Johnny, that slice really impacted buyers. So it'll be interesting to see. That's another interesting thing. Now, so we have the job, the employment's looking pretty good. The CPI is still high. The consumer price index is still high. We're at 6.2 as the last thing I read. The 6.2 is a slight slowdown of the speed up, but we're not slowing down really. And it's way too high. They want to get to 2%. And so that's where we are with that. So, Mike, let me ask you this. I would assume that you're not doing hardly any refis right now with the interest rates, at the interest rates they are right now, right?
Yeah, I would say refis are few and far between. There's still some necessity out there, right? Some circumstances where the refi is making sense for people, but yeah, certainly not because of better interest rates. That's for sure, right? Your traditional refi motivator is, hey, let me pay less interest over the life of the loan. And so you're not getting that scenario. There's no way you have a loan now, a refi loan that's going to be better than any loan that you have, unless you were in a weird loan situation.
Are you seeing people doing cash out refis because like their bills are getting too high for them? So they're willing to actually lose the lower interest rate to get some cash, and they're paying a higher interest rate now because they need to access to cash.
Yeah, no, I would say no, because I talk to people about what's the motivation of the refinance, and so if the motivation is like I'm underwater, I need to lower my monthly debt obligations, which would include the traditional consolidating other payments. The question is your new payment going to be less than those combined payments, whatever they are? And oftentimes with rates where they're at, the answer is no, or it's not a big enough gap. So you have to look, elsewhere. You have to figure out something else to consolidate or tighten up or whatever. So
if you're really thinking about doing a refi, because there's a lot of reasons, many people, it is not the best thing for them right now, probably, like Mike's bringing up. Please give us a call and ask Mike to go over your numbers and see if it's really a good thing for you, because I promise you, I can guarantee you that if it's not a good thing, Mike is not going to try to upsell you. So even if you're looking at somebody else, you should call Mike just to see what his reaction is compared to what you're getting from the other people. Because I know in real life, you need to do that, right? It will save you. Now, sometimes the people you're dealing with are legit, and Mike will tell you the same thing they're telling you, that the other ones are telling you. But there's going to be a significant amount of people who would make that phone call that would find out, oh, this benefit isn't like really the payoff I thought I was going to be getting out of it, even though they're moving forward with something. So
Jim, I've even seen scenarios where people were like getting a second opinion from Mike, and they were like, oh, this is what I'm being offered. And Mike's like, let me see what you got there. I want to make sure it's being presented the way I'm perceiving it. And then after it was all said and done, he's like, jump at that, man. I can't touch that. And that's legit. Go do that. I've seen all those scenarios and everything in between with Mike.
Yeah.
I'm always looking at what's the motivation of the refi. And so take your other traditional. So instead of debt consolidation, maybe you got some special projects, right? And you have equity in your home and you need to tap into that equity in order to fund these other projects. And we're in the world now where, depending on the current loan that you have, you can do a cash out refinance, or you can do some sort of home equity product, right? And you end up with two loans. And this is the scenario where if that equity is available and your current loan is favorable, you do a home equity product, right? You do a home equity line of credit or a home equity loan. And I've given people that advice, Johnny, in much better times as far as interest rates go. Like, hold no, your rate is good. Your cash out refinance is not favorable. You're not going to save money over the life of the loan. You're going to incur unnecessary costs. And so, I'm happy to have those conversations. It could be that the refinance still makes sense, for a certain situation, but those are few and far between, I would say, right now.
I think we could be in for real worrisome times, though, as Jim was kind of talking about. Are we seeing people trying to pull some money out, even though the interest rates aren't great for refis? If they start to see home values starting to really decline, if there's a rush for people to pull equity out, I think that's just a huge red flags for the whole market, right?
Yeah. There's another thing. Jim talked earlier when he was talking with his buddy about, like, borrow as much as you can right now. Like, don't sink your money. Don't do a 20% down. And, of course, there's reasons when you're a buyer that 20% down makes sense. But I talk to people who maybe they're thinking about 50% down or 40% down. And my conversation is simply like, that's a lot of money to put into the zero interest savings account that is your home, right? The equity position in your home. It also, depending on the market, is difficult to access. Like, once you have that money sunk into your home, it's difficult to access and perhaps not even accessible if the market goes the wrong direction. And
That's
so you
true.
do need to be thinking, if you have cash reserves, the question is, should those go in? And of course, this is coming from the loan guy, right? So I get paid based on your loan amount. So yeah, get the biggest loan possible. That's not really my motivation, but I just point this stuff out to people because they're not really thinking about it. They're like, no, I don't want a big mortgage payment. And I said, well, listen, you could keep $100,000 in the bank or in investments, or you can put it as equity in your home, and you have no control over whether you can get that money back or not, right? In the near term or even the long term.
One of the things I love working with Mike last week for Michelle and Dylan, Megan and Dylan, I don't know why I said Michelle, Megan and Dylan, when we were working with them, Mike and I were going over mortgage payments and budgeting. And one of the things we figured out was it was possible that they were better off doing an FHA loan versus the conventional loan they were planning because of better interest rates. And that was kind of unusual. We both kind of like had a little epiphany. Now, it wasn't just a regular FHA mortgage. It was a special product mortgage, but right, Mike, if I'm not mistaken.
Yeah. So there was under this circumstance, it made sense.
Right. So it made sense to actually go FHA versus conventional, right? So when I tried to get the house under contract, the agent, who is very seasoned, said, "Are you doing conventional?" And I said, well, we could go conventional if we wanted, but we prefer to go to FHA because we actually have a better product and it's better for the buyers. So then they didn't have a problem with that. But, that's something to consider. And the other thing you consider in today's market is, and we talked about this a couple of weeks ago with Mike, is you can buy down the points on the interest rate that you have. So sometimes, Mike, would you be better off sometimes? Let's say you were planning on putting 30 or 35 or 40% down. Let's just say you wanted to do that, but instead you put 25% down and you take some of the other money and you buy down points, right? And maybe it's a significant amount, but you get the interest rates like super, super low. Would there be any benefit to that sometimes?
Well, I don't want to mischaracterize it. I don't think you're buying down to get a super, super low interest rate, right? It's costly to buy down a rate, and you're never, unless you're, tons of money to get a super, super low rate. So to me, it's very simple analysis. It costs you X amount of dollars to lower the interest rate a certain increment, right? That lower interest rate results in a lower monthly payment, right? So you divide what it costs you, or divide what you're saving into what it costs you, and you get a break-even point, right? On X number of months. So if your break-even point is 26 months, that means that before 26 months, if you were to terminate that loan, you should not have bought the points. Every month past 26 months, you're in the black on that decision, and you made the right decision. So if you can part with the money and you're comfortable that you're going to be in the home and have that loan for longer than the break-even period, and the longer the better, then it makes sense to buy points, or to buy a lower rate with points.
And these are like real life examples. I'm trying to do this on purpose. Real life examples. These are all things that happen in real life when Mike talks to people.
Now,
And
I'll
I'm
tell you
telling
another
you,
thing that's
most mortgage officers are not going to go through it the way that we're talking right now.
and sometimes, Jim, I would say sometimes points are necessary to get a rate that allows you to qualify for the loan.
That was my next question.
Right?
Sometimes do you have to do that? So in
Yes.
order,
So let's say you're qualified for a monthly payment of $2,500 a month, you know, and that might get you a certain home at 6.5% interest rate, but it puts you out of that price point at 7% interest rate, right? So how do you get down back to 6.5%? Well, you got to pay money to buy down the rate. And so traditionally, we're not having to do that analysis, but right now, especially with people who are like upper limit, maybe you got to take some money. And so one thing that we're seeing a lot is, you know, the seller credit, asking for a credit from the sellers is kind of back in play as far as negotiating, much more than it's been the past 2 years. Can you direct seller funds towards buying points, right? So that you get into a rate that allows you to qualify. And so that's a tool that every real estate agent should be thinking about and talking to their lender about is, hey, can we direct some of this seller funds, right? The money has to come from somewhere. Let's get it from the seller and buy down an interest rate that makes sense. And that way your break even is zero on that, but you know, somebody's paying.
it is becoming more common where the buyers are asking the sellers to help pay for some of the closing costs. And that's another way to get your house sold over other houses if you're having problems. And if you do the math right, it doesn't have to affect you as much as you think it might. If you handle that situation right with your listing agent, you can actually offer that and then actually make your house more desirable than other houses to buy.
Yeah, and that's a tool that, of course, seasoned agents have been using forever. Like, hey, let's get some money out of the sellers, and here, you know, you could sell it at, we'll give them full ask, but then we'll ask some money back, right? Instead of offering something lower than the list price. And so it's not, I like to see that back because it helps as far as like the cash position of buyers. Jim, I saw a listing, they were offering it in the listing comments, right?
Yep.
Seller will offer a credit of $8,000 towards the buyer. And I'm seeing that, and I haven't seen that for you know, a long time.
There's hope out there for buyers. It's very tough on the interest rates. The bottom line on this conversation, very tough on interest rates, but you can still do well in this market if you have the right team and they're got your back and you go through everything. We just put Megan and Dylan under contract this week. Congratulations to them. First-time home buyers got their deal done. We were working with another first-time home buyer, Vanessa. She decided it was best for her to extend her lease for 6 months so that she could find the house that she wants. That was an excellent decision. She actually was surprised that I was happy for her that she made that decision. But that doesn't mean we're not looking anymore. It means that it gives us more time to find the right house for her. So you got to have the right team, right, Johnny?
You do, and I know the right team for you. At least one you should be talking to first to find out if it is right for you. Florida Talk Real Estate is .com. It's your one-stop real estate shop, and we call it that for a reason because you have access to this entire team at floridatalkrealestate.com. On Facebook as well, Florida Talk Real Estate. And remember the YouTube page because there's a ton of informational videos for you to consume and share for people you know that might benefit from those videos. That's Florida Talk Real Estate LLC on YouTube. Remember, floridatalkrealestate.com. Know it, use it, love it, and share it. You can change people's lives. We got just about 2 minutes remaining here. Jimmy D, what are you getting into this weekend?
Man, I don't have a lot to do this weekend, and I'm actually kind of happy about it this weekend. I need to take a break, man.
Excellent.
So I'm doing nothing. I'm kind of bummed out I don't get to watch the Dolphin game, but man, that was a crazy Thursday night game. Did you watch it?
I watched a good portion of it. Yeah, enough of it. I'm not a big fan of Thursday night football. I just don't think it's a great product. I don't think they should be playing on Thursdays. And when the most exciting thing out of a game is a really horrific injury, I think it showcases it's not great football.
Yeah.
And you have to have Amazon Prime to watch.
And you have to have Amazon Prime to watch.
Yeah, that was different. It was kind of cool having Ryan Fitzpatrick anchor, as a sports commentator. Very different style than you see on the traditional networks.
I'll tell you what bothered me about it is that, like, if I'm watching football, I like to flip.
Mhm.
you know, so
Yeah,
whatever, commercial
yeah,
break, whatever.
nothing
But
to
when you're in
flip.
Amazon Prime, at least on my system, I got to like get into Prime and then get
Mhm.
out of Prime, and it's very difficult to flip around while that's happening. So
I was
they
very
need
frustrated
to
about
work on
that.
that.
Totally
Yeah.
frustrated about that. I agree with you.
And those Thursday games are very flippable too. So I
Yes.
totally understand your plight.
Yeah.
Mike Rauch, I hope whatever you're doing this weekend is awesome. Thank you for being with us. Enjoy the rest of your weekend.
Yeah, we're doing a little yard cleanup. There's not much necessary, but it's been wet, and so now it's finally got to the point where you can step out there without galoshes on and clean up some of the mess.
All right. Well, I'm sure it's going to look fantastic when you're done. And Ross Komarinetz with Brightway Insurance, Juno Beach. I hope you have a great weekend too, my friend, whatever you're getting into.
Thank you. I hope you guys do as well. It's going to be a lot of rest for me.
Good,
Yes.
good, Ross. I'm glad to hear that.
We got Allison Chains in town tonight. So if you're going to be out there, look for me. Maybe we'll have a cheers or two. I'll be in the parking lot priming the pump for hours.
Who else is in that show, Johnny? Because I think it was a good lineup.
Breaking Benjamin and Bush. I'll be getting there in time for Allison Chains.
That's awesome.
Yes. Thank you for being with us. Stick around. You got Joe and Greek and Jimothy. The locker room will be squeezing out a sports show. And we thank you for being with us every Saturday. 2 hours of infotainment. Florida Talk Real Estate back at it next Saturday, 9 a.m. And remember, Florida Talk Real Estate is .com. Have a great weekend. Enjoy the locker room. Thanks for being with us on Real Radio.